Now this video is going to be about the Australian ASX 200 index, and it's going to be showing you why making money is so difficult. Now before I do that, I'm going to show you an email that was sent to one of my colleagues, which I think sums it up quite well. Now I'll let you pause the video here, and if you want to read the whole thing you can. But this bit in red I've highlighted. It says if your success rate is really that good, what the beep do you need subscriptions for? Now that is actually a fantastic point, and it's all really to do with psychology of trading. Now I'm going to read out to you the reply to Okay, I'm sorry that we upset you so much. That was not our intention. As you are the first person to complain after attending a free webinar, I thought I'd reply to your comments regarding software. There is very expensive software out there that's about as much use as a chocolate teapot, but there is also some free stuff which is quite good. But in all cases they either do something that Gann didn't, usually called a Gann fan, or have misunderstood what Gann was actually saying. Software never made anyone any money, however good. It's knowledge that is the most important thing, or should I say the correct knowledge. I explained some of the problems here. Now that's one of the previous YouTube videos I've done. The problem you've got is that you don't know the truth from the numerous lies talked about Gann. From your reply it sounds like you've fallen from some of them in the past, especially if you're Indian, as you'd be more inclined to believe in the astrology Gann myth. This is what Gann said on the subject. Now I've read this to you in the past in previous videos, so if you want to pause it you can look at it here. However, making money on the speculative markets is extremely hard. Understanding why is the most important thing you can learn. Most of the time you should be out of the market waiting for good opportunities. In other words, to make big profits. Making small profits is a complete waste of time and effort, and as I explained in the webinar, unfortunately I know this goes over most people's heads because it's not what they want to hear. This is exactly what Gann said in later life when he gained more experience. I do not regard what I do as a job. It is my life and hobby. I will do it until the day I die, just like Gann did. There is far more to life than money. The only people who don't understand this are the people who don't have it. Sitting on a beach drinking cocktails can get a bit tedious after a while. Psychology is a major part in being a successful trader. If you have to trade to make a living, then you will trade not because there is a good trading opportunity, but because you have to pay the bills. Now that is an incredibly important point. Okay, if you need to make money to pay a bill, then you will not be trading for a good reason. You'll be trading because you want to make some money to pay the bill. Therefore you'll start seeing trades that aren't really there. Okay, and I can't stress that enough. One of the reasons I do what I do is one, the business has allowed me to learn what I know, which I believe is unique knowledge. That knowledge has taken a huge amount of time to actually learn, okay, and I just get better and better over time, and probably when I look back say 10 years from now I'll think what I know now is nothing compared to what I know then, hopefully. Okay, but it allows, if I don't see a trade for 2 weeks, I won't trade for 2 weeks. If I don't see a trade for 2 months, I won't trade for 2 months. Because remember, I've got to make big profits. It's not good enough to get in a trade and be in it for a couple of days. All I'll end up is making a very small profit or a very small loss, wasting my time. I'm looking to make big profits and small losses when I get it wrong. Anyway, this is why most people lose, because they see what they want to see and not what's really happening. Now this will go over most people's heads, and they probably just won't understand it. But for those of you who do understand it, then great. Now the big difference between what I do and what Gann did is that basically Gann used, let's say, constants. He basically had certain numbers that he said were important. He had certain cycles that he said were important. This is fundamentally just not true. There are certain numbers that work more often than other numbers on different items, okay, but there aren't set numbers that work on all items in all cases, and every item works in its own unique way, and that's why it's so incredibly difficult making money on the speculative markets, because you only realize that an item is working in a different way after the event. However, over time the market tells you what's going to happen, and you can work out from the past what's going to work into the future. And that's basically what this video is going to be about. But first of all, let's look at what Gann said about percentages. Now I've taken this from Gann's book, How to Make Profits Trading Commodities, which was I think the last book he wrote on trading, which was 1951, and here he talks about what I believe to be Gann's second most important trading technique, and he called them percentages. And basically he says here that mathematics is the one exact science. All nations agree on the accuracy of science of mathematics and its use, regardless of what language they speak. In all other lines scientists disagree, but when it comes to using mathematics, the chemist, the astronomer, the economist and the accountant all rely upon mathematics and agree upon its accuracy. They all agree that 2 and 2 make 4. Any method or system to make money trading in commodities must be based upon exact law of mathematics. Each top or bottom in wheat or other commodities come out according with some exact mathematical proportion to some other top or bottom, and that's exactly what I've learnt over the years. And Gann said that his most important percentage was this one here, which is 50%. He also said that half 50% is important, which is 25%. He also said that 33 and a third is important. He also said that 66.6 is important. He also mentions 37.5, and he also mentioned twice that, which is 75. And 100, you can see here, is just twice 50. And so basically he had these set constant numbers that he said predicted tops and bottoms on the market. Now this is the all-time high on the ASX, and obviously a very important point, and therefore Gann said that that should be important to do his percentages from. So if we go to the high here, and Gann said his most important percentage is 50%. So if I take away 50% down from that high, you can see that it wasn't very good. When it got to 50%, it just went straight through. And if you would have bought there, you would have been stop lossed out. And if you weren't using a stop loss, then you're a fool. However, I also said that half 50% is important. And you can see that it did kind of work at 25% on the way down. However, it didn't stop exactly at 25%. Yeah, but it's just as important to know when not to go short as it is to go long. So this would not be a place where you'd want to short the market. It would be a place where you'd be looking for a change in trend for the market to go up. Okay, the other numbers that he mentioned, or I pointed out, was minus 33 and a third, and it actually did work at 33 and a third. This is a weekly chart, and it did go up for 2 weeks, but then it collapsed. So also, it was right, but it's not good enough to be right to make money. You also need to have a big movement in your favour to make the all-important big profits. So you might have bought here, it goes your way for a week, and then just as quickly as it went up, it comes shooting down. So as I said, you need to understand that you need to make big profits. To make big profits, you need to stay in the trade. Okay, hindsight's a wonderful thing. Unfortunately, when you're trading, we haven't got that. Now let's go to the major low that was made here, and let's do the same numbers. Well, to start off with something, if you don't know how it works, then you've got to start off with some constants, because I don't know that it's not going to work on 50 into the future. It's a decision level. It's somewhere where I'm going to start. Now, at this stage here, okay, I don't know if it's going to work at 50 or it's going to work on the normal way that Gann said until some things happen. Now, if I add 50%, you can see that when it got to 50%, which was here, it didn't work. Or it broke it by a bit and then stopped for a couple of weeks and went sideways, which is also another quick way of losing money. Gann's next major number is 66.6, and in fact that works pretty well. Now, but it does get broken by a bit. Now it doesn't actually look like a lot on a weekly chart, but that's it. Let's look at the daily chart. So this is the daily chart with the 66.6 level on. Now let's see what happens. So this is where we're looking for a change in trend downwards, and the market goes up pretty quickly and we get to the level. So let's say we short it. Or you might say, well, I want to see some weakness first. Well, there's obviously a holiday the next day because there's a gap, and then the next day it goes down. So okay, we'll short it now. Let's see what happens. The market goes back up again, goes back up to the level again, comes back down again. So if you hadn't done it before, you might do it now. You're right, it has stopped exactly at 66.6. Then it goes back up again. Then it starts to go through, then it stops, and then it goes up. And probably most people's stop losses would now be caught. And then it comes down, goes back up again, and then the top of the market was made. So it was right. Gann basically said that 66.6 is an important point to look for a change in trend. But that's why it's so difficult, because if it doesn't stop exactly at 66.6, you can be stop lossed out before the movement actually takes place. Now the actual signal I gave to short this was actually here, which we'll be looking at later in focus. So you need to know when to get into trades. So Gann was right, but that's why it's difficult, because it broke it by a bit. And it all depends on when you actually got in the market and where do you put your stop loss to protect yourself in case it doesn't work. The next major number I told you that Gann talked about was 75%, and if we had 75%, then it's exactly why the market stopped here. Another place where, by the way, I said that I thought there was a short, or it was a short. I don't particularly trade the Australian market because I'm in England, and it's usually when I'm in the pub or I'm in bed, so it's very difficult for me to do, and there's lots of other things that I can trade, but I've still got Australian clients that I do signals for. Now that one there actually I thought was going to work exactly, okay, and we're going to look at that in a minute. Now there is a number that's between 50 and 66.6. Now this is something I discovered, and it's not really Gann. Now notice I said halfway between the two, and it's actually 60, and you can see that the market topped out at that level, but it's not halfway. But mathematically, the way I do mathematics, it is halfway. So with those of you who've got a mathematical background, you can work it out for yourself, but you can see that we've got 4 lines there. Of the 4 lines, 3 of them have worked. So I hope you can see what I'm doing. I'm using Gann set constant numbers and putting it on a chart. Now I could do that on, say, the Dow. In fact, I think the Dow works actually, but I could do that on, say, the Nasdaq, and it might not work because it works in a completely different way. Okay. Now Gann said that this high here should have a mathematical relationship to its future lows. So I would take away Gann's 50% level, which is off the bottom of the chart. I would take away half of 50, which is 25, and you can see that the bottom was made exactly on Gann's 25 level. Okay. Now half of 66.6 is minus 33 1/3. Now that's lower. Half of 33 1/3 is minus 16.66, which is another number that was in that chapter. And if you press return and put that on, you can see that the bottom that it made here was made at minus 16.66. Again, absolutely unbelievable, and thus showing that the markets are completely and utterly mathematical and have nothing to do with people buying and selling anything, because it must be the case, because Gann wrote this down back in the 1920s, and it's still working on a completely different market that probably didn't even exist when Gann was around. Okay, so hope you agree, pretty amazing. Now the next low that was made in 2011 is a case in point. I now know that this low here is working in a very un-Gann way. Okay, it isn't working on his constant numbers. So let's put those on. 50, well it hasn't got there yet. Half of 50 is 25. Now when it got to 25%, it didn't work. The next major number is 33 1/3, a division of 66.6, but when it got there, it didn't work. Okay, now half of 75 is 37.5. 75 is this number that's over here, and that one did work. Okay, so how would we know if it was going to work at 37.5 or not? Okay, and why it might not work at 25, etc. So, or is it going to work at this 50% level in the future? And that's that's the key to making money. When is it going to work and when is it isn't? Because you could have shorted at 25 and you would have lost. You could have shorted at 33 and a third, you would have lost. You could have shorted at 37.5 and you would have made money. Okay, so what we're going to do now is look at that a little bit closer. Now I'm going to show you how incredibly deep all this can get. Okay, and it's all about trying to work out what's going to work into the future and what isn't going to work into the future, because if it doesn't work in the future, you could pick all the times it doesn't work and not trade the times it does work. So it's critical to know where it's going to work and where it isn't. Now I actually did think it was going to work at 75%, this one here. Okay, and I worked that out based on what happened at this one. It's when it got to this top here and this top here. Now if I would have kept the numbers as 66.6 and 60, then I wouldn't have been able to work it out. Okay, but what I did now, what I'm about to do now, you need to know how to work out these numbers exactly to the point. Just by getting the decimal place wrong by a little bit means that you'll actually get it wrong. But if you actually ask yourself what percentage rise it was to there, okay, then by working out this number you get 61.111 recurring, and that's actually exactly, well not exactly, but it's pretty much exactly where the market actually stops. Now why would I pick that one over 60? Well, half that number is actually 30.55, and if you put 30.55 on, can you see that the first rise from this low was exactly 30.55? It wasn't 30. Okay, so that's a clue that the better number is 61.66. Okay, now although Gann's next number of 66.6, as I keep saying, worked, it didn't work exactly. Now the actual number it actually works pretty much exactly at, and again you have to get this exactly right or you won't be able to work it out, but it was actually 68.42105%. Okay, and that's the number. Now by getting those two, which of course I can't do until after I see the exact moment where the market turns, I can then predict the future. And from 61.11 and 68.42105, the next major number in the series is 75. Now 75 happens to be a Gann constant, okay, but I worked that out that should work in the future from those previous two numbers, not from 60 and 66.6. So I've now gone from a constant to kind of relative is probably a better word for it. Okay, I'm using what works after the event to work out what works into the future. Now in both cases, I've already just used Gann's constants or done it the way that I'm doing it here, then 75 happens to be exactly where the market stops. Now, so how do I work out where it's going to work at 50? Well, there's a few ways of doing it, and again it's going to be working it out what works in the past to work out the future. But there's going to be another number in this series of numbers that you can see here, 61.11, 68.4105, which to me meant that 75 should be important, and the next number based on 75 also working, because if it wouldn't have worked the pattern would have changed and I would have had to look for something else. But basically the next number on that pattern should be 80.9523. Okay, now I'll just make that a strong line. Now obviously I can't tell you if that's going to work yet because we haven't got there yet, but what you can see is that from this low here, the second most important low on this chart, you can see that's exactly 50%, a Gann constant, Gann's most important percentage. But after saying that, 50% from this one, in this low in the past, didn't work. So you know, sometimes they work, sometimes they don't. You need to know when it's going to work and when it isn't. So in this particular case it's looking good because the next one in my series of numbers based on those numbers before will be 80.9523, and based on that the next one after that one is going to be 86.363. Okay, now again, I can't prove it until it happens, so I might do another video and see what happens in the future, but the one that looks pretty good to me at the moment is the 80.9523 in the future. Now that's got nothing to do with what Gann said. Okay, Gann just took a simple idea and applied it to everything. Okay, the markets are far more complicated than that, and that's why it's so incredibly hard. And as time goes by, it actually gets easier and easier because you've got more and more tops and bottoms to work out the future. But when you're starting off back in 2009, it's pretty difficult because you haven't really got much to go and start with except for Gann's constants, which I've just shown you work, but they don't work perfectly. And that difference between working perfectly and not working perfectly can be the difference between making money and not making money, even though you could be right, as I showed you with 66.6 before. Now at the time I was watching 66.6 for possible shorts on the AX, but I didn't actually put a signal out on it. So when did I actually decide that this number here could work, this 68.42105? Well, I actually discovered it when the market actually reached the level, and as I showed you on the daily chart before, it got there and it kind of went sideways for a couple of weeks when it got there. So I actually discovered that maybe this one would actually work, and it was based on what happened on the rise up here, and I actually noticed it because of what happened here. I noticed from this high here it fell a certain percentage, from this high here it fell a certain percentage, from this high here it fell a certain percentage, and then realised that basically this was working in a really weird way based on a particular number. So what I'll do here is I'll play the training video that I did on the 23rd of May 2013. When you look at it now, it looks like it hasn't broken it by much because it's actually broken through. But we are at 66.6, but I actually think it's working on numbers based after looking at it. So I was quite pleased with what I did before, but it just shows how incredibly difficult it is. But once you find the patterns, it gets easier. And in fact, that isn't quite the correct number, even though that's the number I'd put on years before the market ever got there. So if we just did our normal stuff, that would be important, and so would 6. Now, as I was looking at my chart, what I'd actually done was I'd gone to this high and just asked myself what percentage fall it had made. Now, I had this on my chart and I just noticed it as I was looking at it, and it was this number here that I had on my chart, 10.526, which, and also on my chart I had this. I had half that number, which is minus 5.263, I think. And then what actually happened was this fall from this high was the same percentage fall, 5.263. So I just thought perhaps it's working on. So I just started messing about. From the major low is actually 68.42105. And if we take off 66, which is the number I put on without the benefit of hindsight. So what we've just seen there is excerpts from the video, the training video I did for clients on the 23rd of May 2014, and it's basically all these lows here were all pointing to the same level as this 68.42 that I mentioned in that video. Now I beeped it out quite heavily, like I said, there's only small excerpts out of it, but you've got enough information on this screen here to work out what I did. It'll take your time, it'll take your effort, but if you look you'll find, and as the saying goes, give a man a fish, feed him for a day, teach a man to fish, feed him for a lifetime. If I just tell you, you'll forget by tomorrow. If you work it out for yourself, then you won't forget. Now I actually worked out that, as I showed you in the video, when the market, I actually worked it out here, but I didn't put a video out on it, and the reason is that the next day when I was going to do the video, it went up, and then the next day it went down, and so I thought actually probably I should do it, and then I was definitely going to do it. In fact, I was going to actually make the trade myself, depending on what I did when I got out of bed, because obviously there's a massive difference between the UK and Australian time. But when I updated my computer, it had collapsed overnight and it was right down there. So as far as I'm concerned, it was too late, because my stop loss would have to be above this high here, and it would be in too big a risk. So I didn't actually make the trade, but it did happen to be the top of the market, and the market came shooting down. Now the next signal I gave was for a buying opportunity down here. So I'll play a little bit of it and I'll kind of explain some points. Now last time we looked at the Australian index, I think I did it about here, and I said that I thought that this could be a major high, and it was working in a really weird way, and how I found it I'll never know. But anyway, they'd had this big fall, and so I thought there was a buy signal, because we're about to fall 10.526, which is the same percentage fall as the market did from here, and I thought it looked quite interesting, and I was going to stick it on as a buying opportunity. And then it got to the level, and like I said, I've done this video, and now the reason I didn't do it is because what I've told you about a technique called the Elliot wave theory, where things retrace 0.618. Now, the previous to this I did a gold video, and I just noticed after I finished the video that the level that I was watching is actually a major retracement of 0.618, which probably indicates that it'll probably work the level I gave, but not work for very long. So bear that in mind if I don't point it out beforehand. Now, the reason I didn't put it out was because we've retraced 0.618 between the high and the low here, and that's why I didn't do it. So what happened? Well, if what normally happens when things retrace 0.618 happens, it'll work to get people to get into the market, and then there'll be a fast reversal to catch the people out who traded it on that rule. And so let's see what happens. The market goes up for a day, goes up the next day, goes up the next day, goes up the next day, and I was beginning to think, why, I should have given out the signal and made the trade, in fact. But then the market in one day gets rid of everything it had made in the previous four, and then the next day it was back down again, and since then it's come down. Now yesterday it actually went up, but actually I think it could be interesting, and the reason is because this number fall seems to be important, and also this one, but as you can see, it actually did work. But now it'll have caught out all the people who bought on the 0.618 retracement, and they'll have lost hope in buying it. So this might not mean anything. Normally I wouldn't do this, but if you double that number from this high here, then it's going to be that 10.526 level that we were talking about before. If we go to the high that it just formed, then that number 5.263 is a little bit lower than where we are, so it could be interesting. So that's what I said back on the 25th, 26th of June 2013, and notice what I said about the retracement of 0.618 without the benefit of hindsight. I said it would probably work just long enough to get people in and then come back down again to catch people out, and that's why I didn't give the signal for a possible buying opportunity here, even though it was that number from that high. There's an old saying which is, what everybody knows isn't worth knowing, and the Elliot wave theory is a classic example of that. However, also in the video I said that this was possibly a buying opportunity, and let's see what happened. And the market went up. Now we're going to look at angles a bit later on this particular item, and it was actually around about here and this low being formed here that I realised that I was using the wrong master time factor on the Australian market. So we will be looking at that in the bit further on in the video. Now what we're going to do now is look at angles. We're going to compare Gann's constant approach, set geometric angles that work in all cases on all items, which, as I said, on percentages I don't believe is true. But Gann was fundamentally right, because he came up with the idea in the first place. But like I said, all this isn't easy, it's incredibly difficult. Now I started looking at the Australian market very closely back in about 2011, so probably when the market looked like this. And so I've got to decide what angles are working on this particular item, and more importantly what master time factor is working. And to start off with, I got it right. Sorry, got it wrong, should I say. Now, to start off with, I'm going to show you what Gann would have done. So from that high, you would have drawn a -1 by 1, you would have drawn a -2 by 1, you would have drawn a -4 by 1, you would have drawn a -8 by 1, he would have drawn a -16 by 1, and he would have drawn a -32 by 1. Those would all could have been drawn back in 2007, 2008, after that top had been made. And you can see that the first angle, the market trades down pretty well and it works quite well. So in the future you would have this line on here, and you can see that it kind of works, but it doesn't quite get there, and then when it does get there it just goes straight through. And that's the difference between not making the trade because it didn't get there, and when it did get there, if you'd have made the trade you would have lost because it just went straight through. Okay, and then for the future we'd have an 8 by 1, and that one doesn't work into the future. Now, numbers that I use that Gann didn't use are the numbers halfway between. So halfway between 16 and 8 is -12. And you can see that it didn't work on the -12. And so when I was looking at it with that much information, I wasn't very impressed and didn't think that was how this particular item was working. So if you would have done what Gann did, you wouldn't have made any money and it wouldn't have worked. So I then spent some time trying to work out the correct master time factor using the old trusty auto angle option. So you know, if you go to this high here, then you can tells you some stuff, some important things about angles that I've written. And anyway, after quite a bit of work, I went to that high there. I won't do them all, 1, 2, 4, 8, 16, 32, but if we do say 32, I'll look for the one that's about 45 degrees, that'll do. And then the next one would be 64 for the future, and the next one would be 128. And when I put those on, because I could see this much information because I had some hindsight, and I was quite happy with that. You can see that the first reaction was made on 128, which is a division of 1, and then the next top was made on 64, which gave us the top, and at the time I would have had 60% on, as we were talking about before, so it was 60 and it was the angle at the same place. So it was pretty good as a shorting opportunity, but that had already happened as I didn't really look at the Australian market, as I said, up to that moment. And then the next one for the future is 32. Now that one doesn't work. Now halfway between 64 and 32 is -48, and the 48 had also worked with the benefit of hindsight. So I was quite happy with that, and I believe that that was the correct master time factor. Okay, so I'd use the same master time factor up from this low, etc., and all these other tops and bottoms that you can see. And then half of 48 is 24, and so that would be another one, and -16 would be another one that I'd watch for the future. So you can see we've got set constants. Now, what happened was the market came shooting down, as we've already looked at, and so I was watching the -32 for a possible signal for the market to be a short, and it got to the level, and that's where I was interested, but then it just went straight through that week, and there was no signal. And then it went up, and so the next angle, I'll just cut that line, and so the next angle is a -24, which you put on a couple of years before the market got there. And as I showed you already on the focus signal, I decided at this stage that 66.6 wasn't the number, and that it was actually 68.4205, and we'd also at the same time hit the angle, making it doubly important. And I also had percentages from this low and this low and this low, as I've also shown you previously. And so another reason why I thought the market might go down, and as I showed you, that was where the market went down. And then previously I showed you that I thought there was a buying opportunity for the market to go up here. Now there was no angle from this low here to give me, or no major angle to give me that low, and it was round about here that I gave another signal for the future. So what I'm going to do now is I'm going to play a little bit of that video. Now let's go with the training video with the 3rd of September 2013, and as discussed in there, I'm looking for a short here It might stop here, but my guess is this is probably the better of the two levels. So on that signal from the 3rd of September 2013, I had that angle on, which gave exactly that top there, and then I realised in my next signal, and I withdrew the signal I've just shown you, where I was looking for a short on the market getting to this level here, and withdrew it before we got there because I realised that I had the wrong angles on the chart. So I've gone to a lot of depth there just to show you that I'm not making up. Now this is a modification to my previous signal, where I said that I thought we might have a possible shorting opportunity if the market got to here. I actually think it's far better now, round about here. So I'm watching what 460ish. Now if you look closely at that focus signal of the 16th of October 2013, you'll notice that the angles that I'm using have actually changed, and in the training video I explain why it's changed, which we're going to look at, but I'll just put those angles on this particular chart. Now I realised what I'd done wrong when this low was made here. Now I showed you I had percentage reasons why the market should go up there, but I didn't have any angles using this master time factor that's coming down from this high, and master time factor should really stay the same. So if it's working on master time factor coming down from the high, the same master time factor should be working from the lows. Now if I change it to the correct master time factor, what happened was the first reaction you can see here, where it's from this low here through this low here, was actually made on a 16 by 1. Remember the numbers 1, 2, 4, 8, 16, so it's one of our numbers. I'd also be watching half that number for the future, which you didn't reach, and I said you can use the angles halfway between the two. So halfway between 16, you can see the same numbers here, 16, 32. Half of 16 is 8. Halfway between 16 and 8 is 12, so it's a set constant number, as long as you know the correct master time factor, and it's where the market made the low. It's also where I had a percentage, and then that's when I started to suspect that I actually had the wrong master time factor. So let's go to the high and let's do the correct master time factor. The problem is that using the normal numbers to start off with, it just doesn't work. So we do our numbers 1, 2, 4, 8, 16, 32, etc., which I did at the beginning of this, but do it again. -1, -2, -4, -8, -16, and you can see that those don't actually work. Now I'll take that off for the time being. Now halfway between 8 and 4 is actually not 8 and 4. Halfway between 4 and 8 is 6. And if you do a -6, you can see that it gave me exactly the top that was made here previously. Now I'll just cut that 8 there. Now halfway between 4 and 8 is -5, and that's exactly where the market actually stops, and was another clue that had actually got the wrong master time factor, because you don't get it with those red ones you can see, with the red master time factor that you can actually see there. But you can see here that the 24 by 1 worked very well, and it's a different master time factor. Well, this is why all this can get incredibly difficult, and it's very easy to do it wrong. Now halfway between a 6 by 1 and a 5 by 1, you add 5 to 6 and 1 to 1, and you get a -11 by 2, and that's practically exactly the same as a -24 with what I now know is the wrong master time factor. So that's how subtle and deep all this can get, and if you continue using those red angles into the future, you'll find that it doesn't work. But it started off looking as if it was working that way, and we're going to do a bit more work on that in a second. Now halfway between a 5 by 1 and a 4 by 1 is a -9 by 2, and that's basically what that next signal was all about, which I just showed you in the previous focus signal. That's why I was actually watching that. Remember, the 75% level from this low is actually a Gann constant number. It's also using these numbers here. It's also the next one in the series as we discussed before, and the market goes through the 5x1 after working for about 3 weeks, and then it reaches the angle, and we've got the percentage, and then that turns out to be the top of the market. And then we had the big fall down from there. And so hopefully what you can see here is how easy it is to do it wrong, okay, and to be led down down the wrong track, so to speak. Now the next shorting opportunity I gave was probably, well, it was the minus 4x1 for the future. So what I'll do is I'll stick that in here. Now this focus signals to go with the training video of the 24th of the 2nd 2014, and again, as discussed in there, I'm looking for a short off the angle minus 4x1, and I'm also watching this angle up here minus 7x2. So in that focus signal, I said I was looking for a short off the minus 4x1. So let's go to the daily charts and have a closer look. So this is the daily charts, and just before I explain the 4x1, again notice the 5x1 where the market turned, the minus 9x2 is where the market turned, and hence why I was watching this one. So what happened? Well, the market went up, it stopped at 75, which we discussed in the past, but we'd also done it back here, so I wouldn't do it again. And then it comes back down again, so I'm still not interested. Goes down, comes back up again, and then it gets to the level that I'm interested. Now look at it, it's going up very, very strongly. What happens the next day? It goes down. Next day it goes down. So it had actually taken it 1, 2, 3, 4, 5, 6, 7, 8 weeks. Yes, sorry, 8 days, sorry, for it to get up to the 4x1, and it took 2 days for it to get rid of all the profits it actually made. And that angle was put on the charts, you know, 4 years before the market got there, or at least 2 years when I worked out the correct master time factor. And this is what it looks like as of today. And again, we can do our angles from these lows to get more signals shorter term if you want to do that. So I hope you agree. Pretty amazing. But what it doesn't explain is why it didn't work in the past. So let's have a look at that. So remember that I kind of worked out these angles into the future when the market was round about here, so I changed my mind. And you can see how incredibly well they're working. So even though what I'm about to show you I didn't know back in the past because it was pretty complicated, but now I can see it, I still managed to find these tops even though I didn't know what I'm about to show you. But I'll take these off, but just remember I already had a 7x2 on and a 9x2, etc. And let's see how it works with a little bit more hindsight. Now probably in the middle of last year, I decided to have a look at it and just see if I could work out how it was working. Now I had a bit more hindsight, and so I was messing about, and I'm not going to do it in the order I actually worked it out because it gets a bit complicated, but I'll put the first one on. Now remember, this is total hindsight, I didn't know this, so minus 5x2. That's basically what I now know to be the correct number. Minus 51x2. Only know this because of hindsight, but can you see how it stopped it for about 2 or 3 weeks when it got there? 51x2, 65x2. You know, I would never know that. Next one, 39x2. Sorry, minus 39x2. Can you see that the market stopped at that number there? The next closest one I could find was minus 29x2. Can you see that it's where the market went and stopped? Here. Then I will realise the pattern for the future. Now, how many odd numbers are there in between 65 and 51? Well, you'll find that there are 7. How many odd numbers are there between 51 and 39? Well, there are 6 odd numbers between those. How many odd numbers are there between 39 and 29? Well, there are 5. So 7, 6, 5. So what should the next one be? 4. Well, if you take 4 odd numbers away from 29 by 2, you get 21 by 2. And I put 21 by 2 on, and it was exactly where the market went and stopped. Everything works mathematically. You've just got to find out how it works. This one obviously is pretty complicated. Now what should the next one be? So it's 7 between those, it's 6 between to that one, it's 5 to that one, it's 4 to that one, so the next one should be 3. And this is where Sod's law comes in. You get 15 by 2, which is 3 odd numbers away from 21, and it went straight through. Now again, I don't mind that. If it's not going to work, I just want it to go straight through. What you don't want is it for just to work just long enough to get you in, and then it goes through. So 7 between that, 6 to that, odd numbers to that one, 5 to that, odd numbers to that one, 4 odd numbers to that one, 3 odd numbers to that one, so maybe 2 odd numbers to the next one. So the next odd number below 15 is 13, so we ignore that one because we're doing 2, and the next one would be 11. And if you put the 11 by 2 on, you can see it's where the market topped out. It's where I found it using the wrong master time factor, which was that 24 by 1 that I showed you before with a different master time factor, but you can see it's exactly where the market stops. And so the next one should be with 1 odd number in between, so 1 odd number away from 11 is 9, and if you put a 9 on, then it gives you exactly where the next top's made. So what's the problem? The sequence is finished. 7, 6, 5, 4, 3, 2, 1. So which one's the next one? But as I showed you, I already had some constant numbers on for the future, so I'm watching that one, and I already showed you from the focus signals that I had already been watching. I'd already been watching that one, which actually did stop it, but it only stopped it for 2 days. I didn't make that trade, but if I would have done, I would have broken even. It went down very quickly for 2 days. I would have moved my stop loss to break even, and I would have ended up breaking even because I'm trying to stay in trades for long, big movements. I'm trying to stay in that kind of movement all the way down there. Yeah. So that I don't know about the benefit of hindsight that movement there was only going to last 2 days. It could have lasted 2 months and be a big movement. Yeah, you've got to make big profits, and that's actually without going into too much depth. That's why making money is so difficult. It's all about staying in trades and not getting out too soon. Now you might ask yourself, why did the market top out here? Now I didn't have an angle, but there is a number that's halfway between this one, and it's this one, 78.048, and it's exactly where the market topped out. And I've only seen that with hindsight. I didn't put it on before that, because if you keep dividing between halfway and halfway, you can fit anything in anywhere, so it's very easy to do, but I just thought you'd find it interesting. Notice that this low here is just working on Gann's normal constant numbers, 16 by 1, 12 by 1 and 8 by 1. Okay, so what we're going to do now is we're going to look at this low and this low here and do the same thing. So from the high coming down here, it wasn't working on constants that Gann talked about. It was working another way, whereas from this low it has, and in fact from this low it's doing the same thing. So let's go to the daily chart. Now remember that we've been talking about these numbers coming down from the high have been pretty important, minus 5.263 and minus 10.526. Well, as the market starts to come down here, without the benefit of hindsight, that's exactly what I'd do. I would take away that number from the right high, of course, from that high, and I'd also be watching twice that number. But you can see with hindsight that when it got to this one, it just went straight through, and it didn't reach 10.526. However, when it got to this level here, I did actually have an angle. So let's put some angles on. Well, I've already shown you 16 going back in the past here, and I've also got 12 from a previous low. If we do 32, which is twice 16. Can you see that it's, remember, it's a set Gann constant, so you just stick it on the chart before anything happens, and it's exactly where the market goes and stops. Now what's half of that? Half of that is 16, and you can see that the market stopped on the 16. Now I would have bought there if I would have had a percentage as well, but I didn't think I did. But looking back with hindsight, I did. There's a number that's halfway between that one, and that number is minus 7.894, and you can see that it's exactly where the market went and stopped. If you really think about it, absolutely unbelievable. Now I hope you've enjoyed it. What I've shown you is unique knowledge. No one's doing anything anywhere close to what I'm doing here, or close as accurate as what I'm doing here. Now what I'm going to do is I'm going to finish it off and show you an email that I got from a recent client after his first few weeks of looking at what we actually do and looking at the training videos, etc. So thanks for listening, and I'll put that up now. Now this is a recent client who basically sent this email, and I think it kind of sums up basically what we offer. I won't read the whole thing, so you can pause it. But if we go to the bit here that I've highlighted, I've just got to tell you this, Gary. As I also mentioned to Simon before I became a GMO client, I was a client of other different analysis services. As I hear you saying all the time, they were a load of rubbish, but with GML I believe I made myself a great deal when I decided to be a client of GML. I think it would take me a long time just to be able to learn what I learnt in the Eureka video, even though I'm super good at maths, not showing off here or anything. Every day I dig deeper and deeper in the knowledge you provide and teach. I become more fascinated with the way you explain and define how the market really works. In the way back early beginning when I used to watch your YouTube videos, I thought, it's just another analysis service provider who's looking just to gain the curiosity of traders to bring in business. But Gary, I'm deeply and dearly pleased you keep proving me wrong every day. GML is way different, really. Okay, so thank you for that. And this is from another email afterwards. So again, yeah, so you can pause it and read there, but if we go from here, from practicing on many different currency pairs, your sentences keep shining and staring at me, Gary. Everything works, you've just got to know how it works. It's amazing, really. And I thought myself, as an engineer and a pro at maths, and how come it never occurred to me how mathematical the market is, how I used to stare at the market before thinking, oh God, how random this wacky market is, and asked, will this day come when I can precisely determine the exact high or low, until that unique and blessed moment when you caught my attention and interest talking about Gann, who I was deeply interested in and trying to learn his techniques. So basically I think that's what I offer. Gann was just a man, he wasn't a god. He had some good ideas, but it was pretty simple compared with where we are now. As you can see, you can't use Gann's constants in all cases. It works sometimes, it doesn't work others. It's far more complicated, as I already said.